Hello, everybody, and welcome to another segment of Market Masters. We have some exciting stuff to speak about today because, as everybody can see, gold is at an all-time high. Silver is approaching even higher numbers. It's still in the $34 to $35 an ounce range. Gold just hit over $3,100 an ounce. Just a couple weeks ago, it was below 3,000. We were speaking about how it was going to reach 3,000 and then keep going from there, which everything actually happened. Now, in the next day, we also have tariff hikes with Donald Trump and the current administration, which we'll speak about. But my real question for you, Kirk, is what's going on with gold and silver? You keep telling us that it's going to keep going higher. It keeps going higher. And you keep telling us why. What else can we expect? Because it seems like you're right on the money every time.
So let's start with the tariff thing because that happens on April 2nd,
Okay.
right? So brief little history on the tariffs. Trump's been promising them reciprocal tariffs, everything else, but tariffs are not just a way to increase revenue for the country. They're also really fantastic negotiating tools, right? So I spent the last 3 days in just intensive like classes, whatever, seminar in New York City. And it was wild. But these kids that were there, all chartered financial analysts, studying for that degree or designation. Brilliant kids, like literally, and I call them kids. They're probably in their 30s in their professional career, but I'm old. I have a gray beard, right? So absolutely brilliant, but you could tell that the mindset is coming from the top, with their Wall Street firms saying Trump tariffs stink and it's going to be horrible. But they're all globalists, right? These firms, they're all globalist in nature and they hate the tariffs. But the tariffs are going to be great for America in the medium and long run. The short run, not so much,
Right.
right? Because you're going to have turbulence. And you're already seeing the Dow, the S&P 500 come, they're like collapsing. The GDP is like it projected now at 0.2% growth. Okay. So people say, well, it's still growing. It's like, no, it's actually not in real terms. Because if inflation unofficially is hovering at 10 to 15%, let's just take the low end of that, 10%, GDP is only growing by zero point 0.2, you're literally shrinking the economy by 9.8% a year because inflation is more than GDP. Well, people are blaming this on Trump because of his tariffs. It's like, no, this is the aftermath of multiple presidencies before this, right? It's like he's trying to make it great because what the tariffs will do, bring jobs back to America. A couple examples of this, of tomorrow being a big, huge day, or April 2nd. Number one, let's look at some tariffs that Trump is putting on Venezuela,
Okay.
right? As a negotiating tool, right? It's like, okay, you got to stop these violent death gangs from coming across the border. And if you don't, then we're going to slap tariffs on you. Not only are we going to slap big tariffs on you, we're going to slap the same tariff on any country that does business with you, right? So who's going to want to do business with Venezuela if all their products are going to be tariffed, even though they have like nothing to do with it? Okay, great negotiating tool. The second one that's actually even bigger is the tariff that Trump wants to slap on the automotive manufacturers. So 25% across the board on any vehicle that's not manufactured in America.
It's big.
I mean, that's huge when you consider all the European brands like BMW, Mercedes, Audi, Volkswagen, um, Rover. I mean, you look at that, it's like, man, this could be big. And then you go to the ultra expensive brands like Lamborghini and Ferrari and so forth. But then you look at the less expensive, like normal people brands like Toyota, Hyundai, Kia, whatever, right? So 25% across the board. Now, this could also hinder General Motors and Ford, American companies. Why? Because the tariff says it doesn't matter what country the car manufacturer is in, it's where it's being manufactured. So Ford and GM are making their cars in Mexico, for example. It's like, okay, even Ford and GM cars could have a 25% tariff. The goal in making America great again is bring jobs back to America. right?
Gotcha.
So who cares if it's an American company? If they're manufacturing their stuff elsewhere, he wants it to be manufactured in America. So this is why the markets are kind of reeling right now in the short term. Massive turbulence, massive chaos. And in that, expect it for a little bit. I mean, who knows what's going to happen
Well,
on the second,
does
but
that mean that cars are now going to be 25% more expensive?
except for the ones that are manufactured in America. Like I know, for example, I think Toyota has a big manufacturing plant in Alabama. So Japanese company manufactured in America, there won't be a tariff on those. Right. So the goal here is to bring jobs back to America because as Americans are working, Americans are spending. As Americans are spending, now the markets are going to start to actually go up.
Yeah.
Real estate, stocks, everything, right? So, but it'll take some time, right? It's not,
When do you believe we're going to start seeing everything turn around?
well, according to Trump and Secretary of Treasury Bessent, 6 months. Last quarter of this year, they said it won't be Trump's economy until then because there's so much unraveling that needs to be done from previous administrations. We're still dealing with the hangover effect of Bidenomics, right? And it'll just take some time. And this is why their messaging is so important, letting everybody know it's like, yeah, we're doing good. We're not miracle workers, though. It's not going to change tomorrow, right? But the foundations are being put in place for actually an amazing, what I believe, renaissance for America, bringing manufacturing back in automotive industry, steel, even semiconductors, right? So to avoid the tariffs, Taiwan Semiconductor, largest chip manufacturer on the planet, is building this multiple hundred, I mean, oh, what is it? Think they're dumping billions of dollars into a manufacturing plant where? In Arizona.
Wow.
So this is amazing. A, a Taiwan chip manufacturer going to be manufacturing in America to avoid tariffs, and what's that going to bring? Massive amount of jobs. See, this is what Trump wants to do. So now let's dovetail a little bit into gold and silver
Yeah.
because
How
as
does
you,
how does everything that we're talking about here impact that? Because all I'm seeing, again, as the layperson, is gold is rising to very, very high levels, and it doesn't
yeah.
seem like it's going to stop. And silver is keeping on moving. Now, gold is moving faster, but as we know, and as you have explained many times, silver will not only catch up, but outperform that based on the ratio.
Well, it's actually not moving faster. So silver for the first quarter of the year, I think gold is up 19.2% in one quarter, right? I mean, so we're talking about annualized growth rate of almost 80%. That's really fantastic. Silver's beating it by like 0.2%.
Right.
Now, silver isn't getting any of the news because gold's getting all the news. But in reality, they're basically neck and neck, but silver's outperforming by just a smidge. Now, I think that this is going to change. I think that silver is going to greatly outperform because it's running out, right? But what we're seeing right now over the last 2 weeks, gaps in pricing of gold. Like it'll close one day, the next day it opens up at $40 higher. It's
Yeah.
like massive gaps. Closes one day, like yesterday, I think it was up like $32 higher on the open. It's like it's just booming forward in overseas trading overnight.
What's making that happen?
So I have a theory, right? So my theory is, let's see, it was so yesterday on the COMEX, open interest went up by from 65, well, it went up by 65 to 70,000 contracts, meaning there is over 45,000 of those new contracts, though, that means people are buying it. When you've got this much open interest, they're long contracts, not short. So they were newly executed contracts with the April expiration. So I'm getting a little technical, but I'll wind it home in less than a minute. So normally on the April expiration as of Friday, it goes into liquidation mode. So the people that own these contracts have to give their intent. Are they going to settle in cash? Are they going to roll these contracts or are they going to take physical delivery? If they're going to take physical delivery, they have to be vetted, meaning, can they actually pay for all the physicals in under their contract, right? And so what's happening though is we're seeing massive amounts of physical delivery. So a few things could be happening here. Number one, somebody big, I mean, maybe a bullion bank, maybe a government like China or somebody is saying, giving their intent, we have the money to buy these. Now, then they declare that they want to buy them, and we better have the commodity soon, right? So this would explain why there's so much physical delivery coming into COMEX, leaving London, because somebody big, which we talked about this, I think, 3 weeks ago, is that somebody somewhere is taking delivery, and we don't know who. We never know who the end recipient of these deliveries are. We just
If
know
it's coming to COMEX, that means that it's coming into the United States.
coming into the United States, leaving London, coming into the United States, probably because they need to fulfill contracts. So I think this is what's happening
Does
now.
that mean that the buyer is connected to the United States? Because if it was China, wouldn't they just get it straight from London?
Well, not if London doesn't have it, right? So China might have a ton of contracts at COMEX, not at LBMA, right? So, but somebody somewhere that has contracts open at COMEX is wanting physical delivery. So the buyer, these people could take delivery and just say, I don't care, I've got the money. Or they could play like they're going to take delivery, right? To drive up the price and then really not take delivery. They just want to squeeze the markets, right?
And
They
what
want to
what happens in a situation like that to the prices?
get, so it could get ugly for them because if they're that big, that's just absolute price manipulation. If they're pretending that they're going to buy it and then the next day they change their mind, they'll go under investigation, say, what are you doing? You have to fulfill the contract. All right, we changed our mind. Well, now you go under investigation. That's a big bad thing. So I doubt that that's going to happen. Or they can simply not do anything and just sell the next day, right? So, but somebody's wanting delivery here. Somebody big is wanting delivery. Now, it's not just, and this is probably why we're seeing gaps, right? And since these gaps are happening overnight, I have a feeling maybe it is China, right? Because during their working hours, they're basically making the notification, and then you see boom, boom, it just is growing a lot. So the thing with this is it could be, though, the beginning of a short squeeze, like what we're seeing in silver. So on Monday, yesterday was like International Silver Short Squeeze Day, kind of a thing. All over X, media, social media posts everywhere. Everybody, retail investors, buy silver, buy silver, buy silver. Let's squeeze these horrible banks and hedge funds out of their short positions,
Right.
right? And yesterday, our volume doubled as a company. We're very massive, silver bullion broker. We saw it really double from the norm. So there's a lot of retail people like you and me, starting to buy. Well, so silver is running out. The supply part of silver is worse than the supply part of gold. I mean, there's really not much there. So what we're seeing is COMEX is turning into a physical market rather than just a futures contract market, which that used to be London that was the physical market.
Okay.
It's all changing. It's all coming back here. And I think this is all kind of part of Trump's plan. This is why they want to audit Fort Knox. This is why there's talk of changing the pricing of gold from their stupid arbitrary $42 an ounce to market, which means they're just going to value their 8,500 tons at the market price rather than $42. And why? Why would they do this? Now, this is where the metals markets, I think, are starting to dovetail with the crypto market. So, under the Strategic Reserve Bitcoin Act, right, there's a couple paragraphs in there that talk about in the middle of it, it's like, well, we're going to revalue gold from $42 to market price. It's like, what does this have to do with the
What's
Bitcoin
the
Strategic
connection?
Reserve Act? So the mechanics of it, as kind of I understand them, and these bills haven't been passed yet, but I'm reading through it. It's like they want to revalue to $3,000 an ounce. Now, all these big banks that have these contracts on gold, paper contract certificates, they have to cough up the difference between $3,150 an ounce, which is what it is today, and $42 an ounce. That's like $3,100 per ounce on
Wouldn't
8,500
that
tons.
wouldn't that put them under?
That would probably put a lot of them under, right? They don't have that kind of capital unless they just print their way out of it because they're Fed banks. But what do they do with that difference? They have to cut a check to the Treasury Department. What's the Treasury Department going to do with that? They're going to use that money to buy the Bitcoin for the strategic Bitcoin reserves. This is why this was in that act, right? So I'm starting to put some pieces together here. And what Trump is wanting to do when they said monetize the assets of the US balance sheet, well, they've got all this Bitcoin. They want to have the strategic Bitcoin reserve. They want to revalue the pricing of gold. They have 8,500 tons of it. They're opening up 650 million acres of federal land to drill. It's like they're going to generate a lot of revenues for America. Now, couple that with the Doge team, which is slashing expenses left and right, making everybody mad, right? Even Elon Musk's former devotees, because he made electric vehicles, and it's like, oh, we can't harm the earth. We have to have clean climate. And now they hate him, and they're like torching Tesla dealers and vandalizing them. And it's like, good grief, how quickly things can turn when you become a political enemy. But Elon is not a political enemy, in my opinion. He's trying to make America great again. Get rid of this excess spending. You know, in your family, you've got two goals as a family when it comes to your finances.
Yep,
Increase your income and decrease your expenses,
correct.
right? Same thing with the federal government.
Yeah, yeah,
And now we finally have it. And the people who are on the dole, basically, it's like all these USAID and all these unions and everything else. Now they're ticked because the money train is ending, which they shouldn't have had the money train to begin with. But all I see is this is an incredible renaissance for America, but it's going to happen in probably a few months. We'll start to see the benefits of, or all the fruit on the tree from all this stuff. In the meantime, take advantage of it,
yeah.
right? Look at what gold and silver are doing. Literally, in the first quarter, up almost 20%, like 19% each. It's like that's annualized for like 80% a year while the stock markets come crumbling down. So much so that a lot of the big companies on Wall Street are no longer giving guidance on buy and hold. They have no idea what's going to happen because of these geopolitical tensions and all this upheaval. They're also downward revising their quarter one estimates, right? Because they don't know what's going to happen. They think that this is all going to be detrimental. And in the short term, it probably is, because in the past, and this is where Trump's making a big, huge change in America. In the past, former presidents would say, let's goose the stock market. Let's provide stimulus money. This is what everybody looks at. It's what their retirements are tied to. Let's just have that be the one and only thing that we look at with the economy.
Yeah.
Well, it was phony baloney money. What Trump is saying, and he said it, he said, I don't even watch the stock market. Don't look at the stock market. Why? Because he's bringing jobs back to America. That's true economic growth, not the value of the stock market. Economic growth is people working and people spending and families being able to thrive. That's the goal of America.
So now, right now, with where we're at, we're seeing the stock market crumble, like you say. We're
Mhm.
even seeing crypto drop from where it was just recently. And
Yep.
while all of that is happening, if you take it in three buckets where you have the stock market, crypto, and metals, metals are the only ones that have been going up consistently. So
Mhm.
you're saying in about, let's say, 6 months from now or over the next few months, we're going to see a big change. How will that impact gold and silver? Where do you see those by mid 2025, maybe end of 2025 in terms of their price points?
Well, Goldman Sachs just revised their estimate for gold for the end of 2025.
Okay.
And it wasn't a small little adjustment, right? So they had predicted for last months that gold was going to hit $3,300 an ounce by the end of the year. Their new revision, 4,300 to a tail end 4,500. I mean, they revised their estimate to $1,000 to $1,200 higher. I
Wow.
mean, that's not a small change,
And
right? So,
do they have any price predictions on silver?
well, no, they haven't, but a lot of other people do, right? So Goldman just talked about gold. People who follow the silver industry, the economists for the miners, and what I do and so forth. You look at history, you look at the ratio between gold and silver, you look at the aggregate demand, right? So when 90% of the demand for silver is manufacturing, not people like you and me, and you look at where we're headed as a world with, the globally, maybe not here so much anymore, but the climate change agenda, solar power, electric vehicles, batteries, nuclear power, that's all heavily intensive on silver. So the demand for silver, we talked about this, I think, a month and a half ago.
Right?
Just for the new Samsung battery could take up 63% of the global supply within 2 years. Just that one thing, right? So the demand for silver right now for manufacturing purposes is equal to the mining output.
Okay.
So there's not any excess, right? Well, what about investors? What about the increased demand for all of these clean energy things? Well, that's not accounted for in the current supply and demand equation. So I think you start to see silver run out. That'll squeeze that ratio like we've been talking about. So I really think by year end, we could see 50 plus dollar silver, maybe 75, somewhere in that range. And by 2026, you could see it from 75 to 130 based on where Goldman thinks gold is going. And I just apply a 40 to 1 ratio to that. That puts gold or silver at like $116 an ounce. So the two kind of go hand in hand, right? You've got gold going up. Anybody invested in gold, you're not making a bad decision. It's going to go up a lot. But the better option would be to invest in silver because it's got catch up to do and there's massive supply discrepancies there. So my encouragement to everybody would still be what I've been shouting from the rooftops for a year, allocate heavily into silver, more so than gold. Take advantage of the ratio trade. And I couldn't be more passionate about this next statement. Don't overpay for your stuff.
Yeah.
Jason, I have seen so many invoices. Again, I just saw one yesterday from somebody who had heard me speak somewhere, and they said, "Can you look at this? I think I got overcharged." I
How much?
looked at it, and it's like, oh boy. Silver was $18 an ounce, and she paid $61 an ounce. It's like, yeah, you got overpaid. You overcharged.
You
Other
know,
people,
I'm looking
silver
at
$32 an ounce, they're paying over 80. These are not good investments, even though you're investing into silver. It's not a good investment.
Yeah, like why play catch up when you can already be ahead of the game? I'm looking at conservative numbers right now from a bunch of different firms and companies and whatnot, and they're saying that they believe that without a doubt by 2027 silver will hit $80. So let's even assume that. Let's go
Mhm.
conservative.
Yeah,
That's still in 2 years over 100% return, which means
yeah,
50% a year. The stock
yeah.
market, if you're lucky on average, will give you 10%. Real estate,
Mhm.
if you're going into safe investments, will give you 5 to 6%. If you're going into residential, it's going to give you 8 to 9%, depending on what you're going to go into. 50% a year on something that's safe that you have that's real is massive. And
Yeah,
that's why I do these shows because again, I'm diversified with my family in many different things, but silver is a really big piece of it. And I think silver and gold is great just to hedge and see what happens because not everybody knows exactly what's going to happen. But what you're saying is always right. And we're seeing it. And even if somebody says, I want a second or a third opinion, go and look at them. There is
yeah,
no way that silver is going to be going down. It's only going to be going up. The question is, at what pace? Is it going to be 100% a year? Is it going to be 50% a year? Is it going to be 40% a year? If it's above 15% a year, you're in really, really good shape. And that's exactly what we're seeing. Just this past quarter alone, like you said,
yeah.
20% is huge.
Well, it's massive, and any wise and prudent investor would be ecstatic about getting 20% a year.
100%.
I mean, I would be, but
Yeah.
we're seeing it in a quarter. right? And so this has always been the case. Right, there's times in history when, okay, stocks are doing better than anything else, and times in history when real estate does better than anything else. We're just in that time because of the geopolitical tensions, the political ramifications of all these economic decisions, these legislative actions, where we are culturally, right? It's like, all right, this is all pointing towards tangible assets for right now.
100%.
Tangible, not
100%.
necessarily paper. So take advantage of the trend while the trend is in front of us. I mean, it's just wise and prudent to do.
Yep. For anybody that's interested in booking a free, and I say free consultation because that's exactly what it is, there's no strings attached. You can use the link in the description below this video. Make sure to fill out that form. Somebody from Kirk's team will get in touch with you as soon as possible. And you can ask whatever questions you have. And it doesn't matter how little or how much you have, there's always an opportunity, especially with them. Make sure to take advantage of it. In times of chaos, there's always opportunity. Take advantage of the opportunity. You're seeing the numbers unfold right before your eyes, and it is not too late. It will only become too late if you keep waiting and waiting and waiting and waiting. Don't wait for things like this. If you have the ability, whether it's $1,000 or a whole lot more than that, to go and invest into something like this, go and do it because it will lead to incredible results from what we're seeing already. So, again, make sure to fill out the form with the link in the description below. Reach out to Kirk's team. Somebody will be in touch. And always let me know your feedback after reaching out to their team. As always, Kirk, thank you very, very much for your time. And I look forward to seeing you soon.
Sounds good. We'll see you.
Subscribe.